Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, boy, oh boy, Rocktober has been rocky like we've never seen before. This video is for Thursday, Rocktober 30th, 2008. And where we left off yesterday, we were in the second day of the FOMC meeting, and the Fed lowered rates by 50 basis points, taking the U.S. interest rate down to 1 point. That's pretty low, traders. Now, what we talked about was the two-day rule. We had a nice big rally yesterday and the day before. That does give us 2 days. Now, what we have, day 2 of the two-day rally being Wednesday's rally, put a swing day in place. A swing day is in place. Now, the two-day rule and the swing day are together, and we have to see if the swing day gets validated by the action on Thursday. So what we are going to do, because the vol has been insane and these swings have been all over the place, we are going to sit back, let the S&P do what it's going to do, and test the swing day for us. And this is what I mean, traders. I'll do an illustration right now for you. A swing day is basically when you have a few days in place, right? The market's been moving, and then you get a rally up higher than the day before, and the market drops and settles. When you get that, normally what will happen the next day is you'll open up and rally about to the high of the previous day. And if it stops right about there, you go short and expect the market to break down. That is a swing day. Again, you have the day right here. The next day the market rallies much higher than it was the day before, comes down and settles a lot lower. The settlement's important. Once you get your settlement in, if on the next day, and that happens to be Thursday for this video, you open and rally and stop somewhere near the highs of the previous day, that should be a short signal, and down you should go. Now, with the mad volatility that we've seen lately, I am not just going to sell into it when it gets here. I'm going to sit back and see what this thing does, because with these major swings that we've seen, there is a likelihood that we can actually go higher than the day before's high and end up here somewhere before it turns. Now, as long as it does not take out the swing day's high, you still have a valid swing day. That's what I am going to wait for tomorrow before I trade. Now, I would like to show you exactly what those swing days look like on charts. I have 2 charts to show you here, so this chart segment will be quick, but I think you will like what you see, traders. So let's go to the charts, and I'll be right back to you. Okay, traders, you are looking at the Dow Jones Transportation Average Daily Bar Chart. As you know, we feel, and by looking at past history, we know that the Dow Jones Transportation Average is the leader of the indice markets, especially in the United States. So if we look at this chart, these red arrows illustrate swing days, and look at all the swing days that have happened on this chart. Let's start back here in May. You put a swing day in, settled lower, the market opened, went just about to the high of the day before, and broke. Swing day number 1 works. Next time we see a swing day is the one right here. It's this bar. The day before was here. We went up higher, settled lower towards the low end of the day, and then we broke down. That swing day wouldn't have given us a chance to get short, but it's still a swing day that worked. The next swing day is this one here. Market rallies, has a big swing day, comes back down, settles towards the lows. The next day it opens, goes a little above the previous day before the swing day, and then the break happens. Number 3 swing day works. Then we look at this swing day. Market rallies, rallies, rallies. Next day opens up, puts a higher high than anything around it. The next day the market comes up a little, and then down she goes. Another swing day works. Here you have another swing day. The market runs up. The next day it runs up higher, is higher than the day before, settles towards the low end. Then on the day that you're looking to trade, the market rallies up, just about touches the highs of the day before and breaks down. So these swing days really do work, traders. Another one right here. Market has a day that a big swing day and comes down and settles towards the low. The next day it opens up, just about meets the high of the day before the swing day and breaks down, and the next day you have a big break. Traders, these swing days really do work. Does every swing day work? Well, of course not. Everything always works all the time. But look at how often this swing day will produce a lower trade. Again, another swing day. You have an up day, then a major swing day, comes back down, settles by the lows. Next day it opens up and craps out. Swing day works. Then we go into a tailspin. Down, 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 down. And what happens? We have a 2-day rule. The market rallies, settles. Then we have a 1-day up. Second day up. Puts in a high swing day, goes back down, settles by the low. The third day it rallies up a little. Doesn't quite make the high of the day before, and then proceeds to break down big. Nice, right? Now we have another swing day. Swing day rallies up, comes back down, settles by its low. The next day, boom, you break down. Here we are today. Market rallied up and then had a 1-day rally. Boom, that was for Wednesday. Now if it came all the way back down and settled right here. If today we open up and do not take out the high right here, if it fails to take that high out, if it opens up, runs up a little, and turns around and craps out, the swing day worked and the 2-day rule will have worked at the same time. That is interesting, traders. The 2-day swing day combo worked here. We have a 2-day swing day combo in place right now. Let's see if we get some downside. With these huge volatile swings, I am not just going to sell it right after it rallies a little. I'm going to let it mess around for a while and show direction. If direction points lower, we're going to get short and see if we can catch the downside. That would validate the swing day and make the 2-day rule work as well. Now let's go look at one more chart here, traders. Okay, traders, now we are looking at the Dow Jones Industrial Average Daily Bar Chart. Once again, look at the swing days that we have pointed out for you traders. The first one we find is back here. You can see the market rallies higher than anything next to it. The next day the market opens, almost hits the day before's high and proceeds to break down. The next swing day is right here. The market rallies up higher than anything around it. The next day the market opens up, just bests very slightly the day before's high and turns around and breaks. Swing days work well. Let's look at another one. Rally up, even though it's a little swing day, it's still a swing day. The market rallies up, goes down, settles by the low. The next day we open, just about take out the day before's high, and down we go. Again, look at these swing days. Look how well they work. Another swing day here, another one right here, one right here, but this one incorporates the 2-day rule with it. And that's what seems to be the environment we're in right now. You had the market put in a low. Actually, was a swing day low, traders, right here. If you want to look at this, the swing days work in reverse. The market goes lower than anything around it, runs up and settles nearer the highs than the lows. The next day, the market opens lower. The market trades a little lower, gets a little bit lower than the day before's low, and boom, you have a 2-day rally. So swing days work on the bottom side and the top side. They work a little better on the top side because, hey, gravity's gravity. Markets drop easier than they rally. So you get better swing days when they are swing days that rally up and then drop. Nonetheless, you had a 2-day rule and a swing day in effect. It started with a swing day up and ended with a swing day down. Look at this. It goes up, breaks down. The next day it opens up, doesn't quite get to the day before's high, and breaks down. So that worked really well on both sides of this, traders. Now let's look at today's situation. As of Wednesday's close, you have a swing day. Look at this right here. It is undoubtedly a swing day, right? If, in fact, the market opens up on Thursday night or Wednesday night into Thursday, is that what we're looking at here, Mike? Or no, this is actually, yes, Wednesday night into Thursday. If the market opens up Wednesday night into Thursday and during Thursday trades up and makes it about as high as the day before's high, it would be a great short, and then you look for the downside. But because of these insane volatile swings, you may end up all the way up here before it fails. As long as it does not take out the swing day Wednesday's high, I think you will be able to short this thing and look for the downside. Indicators on these indice markets right now are getting into the overbought area already, but they're not quite overbought yet, so you may get a more powerful day than we're expecting, which is why I'm going to sit on the sidelines and see if this materializes before I get in. If you look at your technical indicators, you will see if this was an overbought line, we're not there yet, so there is a possibility of another up day before the turn. Now, we do have unemployment coming out tomorrow. At least we have some employment stats coming out tomorrow. We have GDP coming out. There is no way either of the two are going to be better than the month before. So it should give us the oomph, if you will, that we need to put the high in first and then break down. Let's see what we get, traders. Do your own homework and see if your charts agree with mine. So, you've seen the charts, traders. You see those swing days? And in conjunction with the 2-day rule, there is a very good shot that we could have the market do exactly what we'd expect the day after a swing day is put in. Just to be sure you have this right, I'm going to show you the illustration one more time. Follow me here, traders. Here is what you would call a swing day. You have a market that went up. The next day it goes up real high, comes back down, and settles towards the low end of the range. If on the third day, which would be Thursday, today in this video, if we open up and rally up and do not take the highs out here, it is a perfect swing day if we don't take out this high. If, in fact, we do take out this high, you still have a swing day as long as you do not take out the highs of the swing day. And being that we've had such insane volatile swings lately, there's no reason why this day can't start off and go, whoa, up here somewhere, and then finally come down and end up being a down day. That is how you handle your swing days, traders. You look to sell here, you put your stop in above the high of the swing day, and you wait for the market to break. Again, because these moves have been so insanely big, I don't want to sell it right here and put a stop in above here. It would be too large of a stop. So instead, I'm going to let the market play around, and when it finally gives us a signal, we will get in. I suggest you do the same. If your work agrees with mine, you should see that pattern take place tomorrow. You know how markets are, traders. Anything can happen here, so I don't know that that's going to be the thing, but that's what I'm looking for. Now, we had a 2-day rule in effect for today, Wednesday's trading. The FOMC comes in, they make their cut. We wait a little while, the market rallies a little, and then we get in. We put our stop in, and you know, there was so much volatility today. It went up, took out our stop, turned around and dropped $50, but we were stopped out. Sadly enough, I know, but hey, you can't always get them right, traders. What we did do, though, is we stayed bear-minded. We got in on the short side. Just too much volatility on a Fed day. You know the volatility on Fed days, so they tagged us. That is an integral part of trading, traders. You cannot have winning days every day. You must have losers with your winners. So crack, Oscar. They tagged me. I got slapped like a babe in the woods. But hey, you know me. I'm a tough guy. My dukes are up. And I'm going to come out swinging Thursday and Friday. And I'm going to get a good trade. You know me. I'm not going to quit for nothing. So if you are here and you are at my site and my chat rooms, you know you got me working in the corner with you, and I will be here to help you. So come on down to the site, traders. It's www.livewithoscar.com. Grab yourselves a free membership and jump into the chat rooms. Okay, traders, I'm not going to talk about much more in this video tonight. You see the setup here. Let's see if we get that. Keep your emotions out of these trades, traders, no matter what you do. Don't get sucked into the emotions of the markets. If you make emotional decisions, I assure you, you will end up getting tagged left and right. So please try not to do that. All right, traders, it is Thursday. This is absolutely a bearish market. No bear market just goes completely straight down every day. You will get dead cat bounces. Don't fall in love with the upside no matter what you do here. No matter what you hear on TV, the talking heads, everybody in the world suddenly is bullish. Amazing, right? We have a one-day rally yesterday, CNBC, you know, forget about mentioning names. All the talking heads come out, and they're all like, the bottom's in, I'm so bullish, we're going to the moon. These people are crazy. They don't know how to look at analysis. They don't know what a bear market is. Yes, you can get a bounce, but that doesn't make it a bull market all of a sudden. We are in some trouble here, traders, and the trouble in Europe and in the euro is just beginning. You think we're out of trouble? Forget about it. Not yet. Yes, I think we can get out of trouble, but it didn't start today, not in my opinion anyway. I will say this, I am not blind and I'm not pig-minded. If this market turned into a bull, I'd take that off my board in a moment and we'd say don't fall over the downside, but we'll wait until that happens. For now, we are in a bear market. We sell rallies in bear markets until we are told by the markets not to. That is our posture. All right, traders, make sure you're with me tomorrow. Make sure you don't trade alone. Make sure you get in our chat rooms, and let's see what we can do about the trades. All right, traders, keep your emotions out of trading. One of the best things I can do to help you with that is to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.